Time now for an in-depth look at the market news on this Monday. And for that, I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for making time today.
Happy to be here.
Well, U.S. stocks ended last week a fair bit higher, despite the holdup in talks on the new stimulus bill, a big boost from earnings of the major tech firms. Now, Korean shares a little higher today, too. What's the story in the global markets and here in Korea?
Okay, well, as you mentioned, the U.S. markets ended up a bit on an upside. There were some good news, but it was mostly not so good news. So there does seem to be some degree of separation between the real economy and the stock market. But if we had to find some reasons why the markets were so optimistic, well, the Fed had the FOMC meeting last week, and it did confirm that Fed will maintain the low interest rate for the foreseeable future and will continue to purchase corporate bonds at least until the end of the year. And as you mentioned, while the Congress could not agree on a stimulus program and extension of unemployment insurance, I think it's a given fact that it will happen probably sooner than later. And for the second quarter corporate earnings report, about 63% of S&P 500 firms have published reports. They're bad, but not as bad as expected. So earnings were down 35.7% compared to last year's second quarter. That's the worst earnings fall since fourth quarter of 2008. But 84% of reporting firms actually beat the analyst expectations. And the difference between the amount earnings, difference in earnings between expectations and reality turns out to be about 21.8%. So things are bad, but not as bad as they thought. And that seems to be feeding into the optimism of the U.S. market. Now, the European markets have been falling rapidly since Wednesday because in some European countries, the coronavirus seems to be coming back. The Asian markets were mixed for most of last week, and it's mixed today. Shanghai rose most of last week, and it's rising today. Hong Kong Hang Seng, it fell most of last week and is falling today as well. That's probably because they're having a rise in coronavirus cases. Nikkei, it fell rapidly last week, but it recovered quickly today. And the analysts are attributing that to individual investors picking up cheap stocks. And then Korea, the Kospi mostly rose last week, and it rose very slightly today. The individuals bought stock. Like Japan, they seem to be picking up cheap stocks because foreigners sold off a lot of Korean stocks last week. But on the other hand, Kosdaq, perhaps because the tech stocks are doing well in the United States and elsewhere, it rose most of last week, and it rose by 1.5% today. Individuals, in this case, sold the stocks, and the institutions and foreigners bought the stocks on the Kosdaq market.
Well, Professor, a big story in the past few days is the damage the pandemic has done to major economies around the world. Korea's economy did contract in the second quarter, just like most others, but by the second smallest amount among these developed countries in the OECD. What do you make of that, Professor, and what's your outlook?
Okay, well, the only major country which scored positive growth was China. They scored 11.5% growth, and that's partially because they had such a bad first quarter because they were in a shutdown for most of the first quarter. Now, the other major OECD countries like Germany, U.S., France. Germany had minus 10% growth rate. U.S. had minus 9.5%. France had almost minus 14% negative growth rates. Korea only had negative 3.3. But we should remember that for the United States and Europe, part of this fall was deliberately chosen result of policy. The government forced the shutdown on the supply side and lockdown on the demand side, so that was bound to lower the growth rates. That was, as a lot of economists said, induced coma. And it was necessary to cut down the coronavirus. For the European countries, it seemed to have worked. Their coronavirus cases have gone down significantly, and they're looking at optimistic third quarter. United States, not so much, because they couldn't stand the lockdown and shutdown. They seem to have gone out of it prematurely, and now they're looking at a pessimistic third quarter. On the other hand, Korea. Because Korea depends on exports for about 40 to 45% of the GDP, unlike even China, where only about 20 to 25% of their GDP is concerned with exports. We really need both China and United States to recover if Korea is going to have a recovery. Now, China does seem to be on a solid footing to have a recovery. So if you look at the July export figures, Korean exports, China went up. Korean exports to the United States went up as well. But as I mentioned, United States is looking a bit more pessimistic for the third quarter. I think the United States, whether they're going to have a recovery or not, is the big wild card here. If the United States does succeed in recovering in the third quarter, global economy, well as Korea, will have a fairly good third quarter. But if United States goes back into a serious recession, then it'll be very difficult for Korea to have a good third quarter.
All right, we've got about a minute left, Professor. It's the start of a new week. What's coming up in the days ahead?
Okay, well, the big news is the Korea government's housing supply policy. It was supposed to be announced last week, but they delayed it to this week. That's going to be sort of the big giant news that's going to come out this week, hopefully, unless they delay it again. And then there's the Korean Consumer Price Index and inflation numbers, which are supposed to come out, and the current account and capital account numbers from the Bank of Korea, which will be interesting as well. On the United States side, as I mentioned, the July numbers will give us some indications whether they're going to be back in a recession or going to a recovery. The U.S. July employment and wages figures should be out this Friday, and U.S. Purchasing Managers Index will also be available this week.
Got it. All right, Professor, thanks so much for your insights today, and we'll speak again soon.
Thank you.